Hi, welcome back. In this video, we are going to continue where we left off on line 12, Standard Deductions and Itemized Deductions. All taxpayers are given a standard deduction that they can deduct from gross income to determine their taxable income. The standard deduction is adjusted each year with inflation. However, many taxpayers have another option. Instead of taking the standard deduction, they can itemize deductions. Itemizing deductions broadens the amount of deductions a taxpayer is allowed to deduct from their income before determining taxable income. We will again be looking at the taxpayer, Emily Green. Emily wants to see if itemizing her deductions is more beneficial than taking the standard deduction. And so we will need to fill out Schedule A. Going to Schedule A, we will start at line 1. Line 1 asks for medical and dental expenses. Emily had the following possible itemized deductions for her medical and dental expenses. She had insurance premiums for $1,250. She had a copay for a doctor's visit for $40, billings for her daughter's cavity for $160, over-the-counter shampoo to treat dandruff for $40, and prescription medicine for $50. Any medical procedure involving surgery, doctor's visits, tests, and therapy that is medically necessary for restoration of health is tax deductible. Anything cosmetic, over-the-counter, uncommon, or voluntary is generally not. Going through the list of her medical and dental expenses, most of them are deductible, though there's one expense which should stand out as non-deductible. Take a moment to think about what expense is non-deductible. If you thought that the non-deductible expense is the over-the-counter shampoo, you are correct. After totaling all the expenses besides for the over-the-counter shampoo, we get the total amount of $1,500. On line 2, we enter the amount from Form 1040, line 11, which is adjusted gross income. A taxpayer can deduct medical expenses that exceed 7.5% of their gross income. So we're going to multiply Emily's adjusted gross income by 0.075 to get 7.5% of her income. We will then subtract 7.5% of her income from line 1. If line 3 is more than line 1, we will enter 0 on line 4. Line 3 here is more than line 1, so we enter 0. So Emily cannot deduct any of her medical and dental expenses because they do not exceed 7.5% of her gross income. The next part of Schedule A is for taxes paid during the year. Line 5A is for state and local income taxes or general sales taxes. Line 5B is for state and local real estate taxes. Line 5C is for state and local personal property taxes. Line 5G is used to add up lines 5A, 5B, and 5C. Line 6 is used to report other taxes such as generation skipping taxes imposed on income distributions or foreign taxes imposed by a foreign country or any of its political subdivisions. One of the most common taxes that taxpayers have here are personal property or real estate taxes and assessments imposed on their home and or their vehicles. Emily had personal property tax of $6,000, which is entered on line 5C. This is all she had for this section, so we will add $6,000 to line 7, which is the total. The next part of Schedule A is for interest paid. Line 8 is for home mortgage interest. Generally, home mortgage interest is any interest paid on a loan secured by the home and can be deducted. Line 9 is for investment interest. Investment interest is interest paid on money borrowed that is allocable to property held for investment. Personal interest such as interest paid on credit cards and auto loans, is not deductible. Emily had $4,300 of home mortgage interest reported to her on Form 1098. So we'll enter that on line 8A. She had no other interest paid, so the total on line 10 is $4,300. The next part is for charitable contributions. Emily has the following possible itemized deductions for her charitable contributions: $200 check to a war veteran organization, a $300 check to a political candidate running for mayor, a $150 desk donated to a qualifying organization, a $700 check to her niece for her to study abroad in the summer, and a $540 check to her friend to help cover the cost of rent. For line 11, we'll look at her charitable contributions. First, we have to see whether they were given by cash or check. We have 4 contributions which were given by check, though of those 4, only 1 qualifies. Political groups or candidates for public office, and tuition, which any type of tuition, private school, college, etc., does not qualify as a charitable contribution. Other organizations that do not qualify include civic leagues, social and sports clubs, athletic tickets, labor unions, and groups whose purpose is to lobby for law changes. Donations to individuals also do not qualify. For line 12, we will look at her donation, which was not cash or check. If an individual gives a charitable contribution, such as property, to a qualified organization, they generally can deduct the fair market value of the property. The fair market value of the desk she donated was $150, so we're going to enter that here. She has no carryover from prior years, and the amount does not exceed 60% of her income, so she can deduct $350, and we're going to enter that on line 14. On line 15, casualty and theft losses can be deducted. The TCJA repealed deductions for casualty and theft losses except for losses incurred in presidentially declared disaster areas. A casualty is a damage, destruction, or loss of property resulting from a fire, storm, shipwreck, or other casualty or theft. Line 16 is used to enter other itemized deductions. Some other itemized deductions that may be entered here are gambling losses up to the amount of gambling winnings, or impairment-related work expenses. If a taxpayer has a physical or mental disability, their ordinary and necessary business expenses in connection with their place of work that are necessary for them to be able to work can be deducted. On line 17, lines 4 through 16 are added up. The amount on line 4 was 0, so we will add $6,000 plus $4,300 plus $350, which equals $10,650. We will now go back to Form 1040 and see if it is better for Emily to take the standard deduction. The standard deduction is $18,800, so it is more beneficial for her to take the standard deduction. We are going to enter the amount of $18,800 for her standard deduction. Keep in mind that taxpayers have an option to itemize deductions even if they are less than their standard deduction. If a taxpayer takes the standard deduction, they are able to deduct charitable contributions on line 12B. We then add line 12A and 12B together to get her total deduction. We learned earlier in the video that Emily had $350 of charitable contributions. Though the maximum that can be deducted when taking the standard deduction is $300. So line 12B will be $300 for Emily. We will then enter the total amount of $19,100, which is line 12A plus 12B. on line 12C of Form 1040. Now that concludes this video. Thank you for watching and stay tuned for the next video that will go over tax credits.